joining us today. I will be speaking today about something very topical, cross-border investing in a changing local marketplace. So some of the things, okay, so let's start with the very basic things, right? So why should you invest offshore? All right, it's probably, as I've said to you, more topical now than ever, but do you think just because it's topical that, you should invest offshore? So I'm hoping in very many years, when people have stopped following another person's Twitter feed, that I will be remembered for this, the DOOR principle. So what does it stand for? Diversification, opportunity, offshore expenses, and a rand hedge. And so over the next few slides, I want to unpack what each of these ones stand for. So let's start diversification. If you're familiar with economics and investing, you'll know that diversification is probably the word that you'll find in most online articles currently. And what does it mean? Because when people speak about diversification, people show you a correlation matrix, don't they? They show you the diversification between asset classes. But diversification is a lot more than that. Diversification is also diversification between geographies, asset classes, mandates, and managers. If you look at the slide here, this shows you our London office, Momentum Global Investment Managers. This is some of the diversification that they offer by manager. And so you can see where the manager sits. It's a very specific form of diversification. Opportunity set. So how many traded shares can you really invest in the JSE? I mean, most people will tell you probably between 60 and 80 if you want a meaningful position. Same for asset managers. There are 4,000 companies actively traded in the New York Stock Exchange. This is a new abbreviation that you'll hear many people refer to, the FANG stocks. Has anyone heard of them? Facebook, Amazon, Netflix, and Google. So if you take their performance back to inception 5 years ago, they would have given you an annualized return of just short of 40% in US dollars. That doesn't take into account the currency. This is what is meant by an opportunity set. 60 to 80 stocks locally, 4,000, of which some of them has given you 40% annualized return. Offshore expenses. And so offshore expenses is related to the next slide as well, but fascinating. I don't know if many of you know well, that's obviously McDonald's burger, but does anybody know about Bergenomics? Bergenomics is a very kind of light-hearted way to tell you what the value of the currency is. So let me ask you this. When was the currency at parity against the US dollar? Can anyone wants to venture a guess? 1982. So what happens if you take the currency back then at parity and you adjust it forward only for inflation? Where do you come up with? Any wild idea? 6? 6 odd? So if you take 6 odd %, escalate it forward, model it forward from 1982 when there was parity, where do you come to right now? You come to an exchange rate of 12.40. Fascinating. It means that the currency is currently undervalued by about 60%. I think this morning we were trading at 15.50, so fair value currently sits at about 12.40 to 12.50 for the rand. And this is reflected in this graph here. I mean, welcome to the world's most traded and volatile currency. This year is a 5% move. If you follow news, and especially if you follow currency pairs, when a currency moves by more than 5%, it is a Bloomberg headline, right? And it happens once or twice a year let's say once or twice every few years. The South African rand moves by 5% most days. And so how do you hedge yourself against this? How do you hedge yourself against such a volatile currency? And the reality is it's very difficult to know what's going to happen with the currency. I know of no economist that will tell you what's going to happen, to put their head in a block, to tell you what's going to happen with the currency, close the business today. Because the reality is nobody knows. It's just too volatile. There's too many things influencing the rand. And so let's look at what is influencing the rand amongst other things. So some key economic discussions. And please engage with me on these locally. Let's focus on local first. Ramaphosa is probably over. At his speech last year, he promised growth of 3%, right? With a focus on unemployment. So let's see how that's worked out. The reality is growth last year was 1.3%. Now, I'm no mathematician, but that's kind of a lot short from 3%. Current growth, has it been any better? Current growth is negative for this year. Most people will tell you some growth is better than no growth. The reality is, if growth isn't better than at least your population rate, you've got a problem, and we have. Unemployment rate, officially, 29.30. If you take into account the true definition of unemployment, unemployment's 39%. What is the unemployment rate amongst our youth? 58%. 58% unemployment between 15 to 24s. You think it's better for graduates? Graduates, 35% unemployment rate currently for graduates. Let's speak about credit rating. Interesting. Research shows that once you get downgraded by 2 of the 3 ratings agencies, between 6 years or 2 months, the third one will downgrade you. November is 2 years since we've been downgraded the first time. Most people will tell you we are most likely getting downgraded. Moody's are very upset, specifically about state-owned enterprises. I don't need to tell you about those. Anybody wants to venture a guess what the amount of debt is backed by government guarantees for state-owned enterprises? Any guesses? Yeah, let's call it, what's a few billion in this room? The reality is it's 600 billion. 600 billion is the debt for state-owned enterprises. You got it right. You must be Francois. But the reality is state-owned enterprises, it's a sore point. And you wonder if Ramaphosa is really doing anything about it, because he's overridden. So firstly, key piece of news, everybody in Eskom is getting a 9% increase. Secondly, they're going to split it into 3, and Ramaphosa has committed to not let anybody go. Okay? An overseas agency did a fascinating study on Eskom. Eskom is 66% overstaffed. It can do exactly what it's doing now, which is obviously not a lot. Probably shouldn't tempt fate, but with a third less. Let's speak a little bit about trade wars and global economy. I mean, everybody has seen this picture. The reality is that it is really a lot more dire. So economists, right, people running money, they should study textbooks. They should study history. What does all of them study currently? They study and follow a tweet feed of this man. I mean, to tell you the truth, for the first time yesterday, one of my colleagues showed me his Twitter feed. That's ridiculous. You hear of these things. But economists and fund managers are studying his Twitter feed to see what's happening. We don't care really about key economic indicators. We study somebody's Twitter feed. And so the reality is that is not normal. It really isn't. Let's speak about a global downturn, and I've got a few more graphs to substantiate exactly what I'm talking about. But things globally isn't looking great, right? So the states are doing fantastically well, and this will show this. And so what this is, S&P 500 against the MSCI World, split out the US, split out the American markets, and compare that to the MSCI emerging markets. Very good correlation, but maybe something you want to focus on is the difference between this point here and that point there. Now, why has the US done so well? And I'll show you a little bit, but this sugar rush, this candy land that Trump has created, cutting interest rates, he's now increased interest rates slightly, but what they have is they've got a lot of money, and I'll specifically quantitative easing. And I'll show you that as well. The sheer quantum of quantitative easing. China's slowdown, This shows GDP in China. Industrial production in China, which is a key indicator, is in its lowest level in 24 years. It's arguably important, but as most of you know, China is trying to move away from being an industrial production and more trying to move into a service-oriented economy, but they have got serious problems. Germany's got negative GDP growth. The US has got a negative yield curve. Now, the yield curve never lies, people. The yield curve predicted the recession 10 years ago, 12 years ago, when it inverted, and the yield curve is inverted now. In many places, you have the whole yield curve inverted through every single bond maturity. I mean, 10 years ago in textbooks, there's none of that. It didn't exist, you know. Yeah, people say to you, crazy. The yield curve cannot invert at each and every maturity. So look at this. This is money, and it happens quite quickly, but look to the left, the amount of money we're talking about. This is money being injected into the system. So firstly, the Swiss National Bank. I mean, this speaks for itself. People think that the Federal Reserve has pumped a lot of money into the system. The reality is, it's overshadowed by what China is doing. And there speaks, Germany is now pumping in another 500 billion. We're throwing these words around like means nothing, 500 billion. And so, this picture that I'm painting is probably the best one, is it? But the reality is, should you take your money and swim, for those of you who can swim? We don't think so. We really don't. What we do think is that you should have exposure to offshore markets. Absolutely in your portfolio. How much varies, but probably at least 25% if you exclude rand hedge stocks. And so we don't think that because it's topical, you should want to go offshore. We really don't. We think it should be part of a financial plan, and we believe that in an average balanced portfolio, everybody should have offshore exposure. It should not be a knee-jerk reaction. You should not try and time the rand. Nobody has gotten it right. And I think what you just should decide is, you know, how much of a client's portfolio should be invested offshore, and then what route to take. And so that really brings us to this point. So we know that it's probably a good idea to invest offshore. We know that locally things are probably not as good as it can be. There are green shoots, but how do you invest offshore? So firstly, you can use feeder funds, of which most of you know, rands in, rands out, Momentum Wealth platform, obviously, but use the offshore allowance of the asset manager. Okay, rands in, rands out. What do you get though? So you get exposure to the rand. That's probably not a bad thing, but you don't get to hedge yourself from that volatility that I showed you a lot earlier. So depending on what your objective is, that might be what you want, but it's not considered true offshore. Secondly, you can invest in asset swap through a local endowment. So you use Momentum Metropolitan's allowance. Again, very similar. You also expose yourself to the rand, so it's rand in, rand out. And it's not what we consider true offshore. So what is true offshore? True offshore is typically a hard currency investment through a platform that's situated in Guernsey or any other offshore jurisdiction. What makes Momentum Wealth actually fairly unique in the industry is that, you know, you can take your offshore allowance. Offshore allowance is 11 million rand, 10 million rand plus 1 million rand, and people are normally perplexed by the complexity that arises from using an offshore platform like Momentum Wealth International. I'll show you a little bit later what we do about it. But what's fascinating is you can externalize money through our local platform. Not feeder funds, not asset swap. You can externalize money using offshore allowance through a flexible investment option. Grab a BC and they'll explain to you. But we're the only platform in the country that does that. So externalize money through a flexible investment option. And then you can also use the Momentum Wealth International platform. So just quickly touching on what you can access. So, you know, let's call it wrappers, what you can access on Momentum Wealth International. So either one of two, international endowment option and an international investment option. So it very much depends on what your client's goals and needs are, but I'll give you a short rundown of some key characteristics. So endowment, I think the problem with endowments, people think endowment and they go, liquidity is a problem. Liquidity isn't the problem with our endowment. It really isn't. You get 100 underlying policies. So liquidity is there. Favorable tax rates, because in the individual rate, you pay 12 and 30%. So according to the 5-fund tax approach, which we pay on your behalf, unlimited contract owners. I'll speak a little bit about the fund range, but obviously 5-year period. What's nice is you can, many people use the international endowment option if I look at where people support us on our platform. And, if you look at favorable estate tax planning and specifically things like citus tax, you don't pay citus tax if you're in an endowment. International investment option, think open-ended investment. Okay, so no restrictions. You also get unlimited contract owners, great fund range, and I'll touch a little bit about the fund range. No minimum term, so that is important. But what obviously, makes it fairly attractive is this sentence here. Tax statements are provided, not certificates. I've seen we've got some offshore specialists here, some momentum specialists. So Sherry Lee, please, if there's any more information that you guys need, she'll be happy to guide you on this. So what can you help? So we've got either one of these two vehicles that you can use, right? An endowment, 5-year open-ended investment, tax-friendly versus flexibility. So what can you do inside them? Okay, 3 FSCA approved funds, and I go a little bit into detail about these 3 FSCA approved funds: Momentum Global Cautious, Global Managed, Global Growth. What's nice is they're not managed from South Africa. They're not managed by South Africans. They're managed from London, not by South Africans, by Londonese people. Okay, of which one of these funds won a Raging Bull. Okay, and so I'll touch on a little bit about that as well. 16 endorsed hard currency funds with a momentum stamp of approval. Okay, so it's stuff like Investec, Contrarius, stuff Catalyst, Coro, Ford, Franklin Templeton. Then we are an open architecture platform. 1,200 hard currency funds that you can select on our platform. That doesn't take into account 47 FSCA approved ETFs, of which many people don't know. So if you want to go active, we can help you. If you want to go passive, smart beta, we've got 47 FSCA approved unit trusts. Then, if you want to go, and you'll hear Stephen speak a little bit later, you can go personal share portfolios, speak about custodians, right? You want to access FANGs? You can. Momentum Securities, Credo, Saxo, PSG, we're busy uploading Interactive Brokers and Canaccord as custodians on the MWI platform. So let's speak a little bit about these 3 FSCA approved funds. So all managed in line with the Momentum's outcomes-based investment philosophy, multi-manager funds. I'll speak a little bit about the success rate. If you know something about outcomes-based investing, it's really about getting you to your goal in as smooth and predictable a journey as possible. People always ask, what's the chance that you actually get to this investment range, right? Because it's all about this outcome, and we want to make it as tangible as possible. And so the success rate for Momentum Global Cautious, 82%. 82% probability that we get you to Global Cash plus 2, net of fees. Global Cash plus 4, over 5 years, 97% probability. Okay, and that's not on fictional data. This is real data. Global Cash plus 5.5 from the Momentum Global Growth. If you've got a 7-year time horizon to your goal, to your outcome, 100% success rate. I don't want to go into too much detail here, but it's all, like I said, the most important thing is, guys, FSCA approved, daily traded, liquidity, US dollar priced, inception date is greater than 10 years. Has the performance been any good? Are we good at managing money? People sometimes think Momentum's not good at managing money. I mean, and whether you like it or not, people still focus on performance, right? And so what does the people say? So if you look at one of those 3 funds, this won the Raging Bull for the best multi-asset high equity fund. That's the Momentum International, Momentum Global Managed, and this fund, Momentum International Balanced Feeder Fund, feeds into this. how's the performance been? So let's quickly check at performance. So this can be a little bit busy, but let's quickly just unpack what's happening here. So as we said, when we look at those probabilities, global cash plus 2 since inception, global cautious has outperformed its benchmark of global cash plus 2. Global cash plus 4 against global managed, that has been successfully met. And if you look at global cash plus 5.5, global growth has outperformed that as well. Now, I think it is easy to throw around performance numbers, but let's compare against peers, because I think that's important. Because, for me, the most important thing is you want something that's predictable and boring, right? That's the best fund. Something that's predictable and boring and competitive against peers. So let's look at how these funds have done. And I'm not going to go into each and every one of this. But what is important is that most of them are first and second quartile. And that's all you could ever ask for from an asset manager, is always to be consistently first or second quartile. And that is what these funds have done. That is what they were made to do, to be boring first and second quartile. I mean, it is just ironic, I guess, that that fund, the global managed fund, is ranked number 1. Okay? And what is interesting, so the Morningstar ones is probably very, very good to look at, because how many unit trust funds are there? Anybody wants to venture a guess? How many unit trusts are there in the Morningstar universe? 1,700. Okay, that's not a bad guess. There's almost 1,700 local funds. Morningstar universe, 187,000 funds. And, sorry? Oh, no. If you have a question, please ask. Use Slido. But the point is, look at the first and second quartile performance benchmarked against 187,000 funds. Has this performance come at increased volatility? I'm not going to bore you with the efficient frontier theory. What you want is your funds, and these are not individual funds, these are category sectors, so there's hundreds of funds in them. But what you want is you want your funds to be as high as possible on the efficient frontier, which is exactly what you get here. And so what it means is this performance that I have shown you doesn't come at any additional risk. Okay, and that is very important. So we haven't taken extra risk to get you the performance that you've seen. And so let's quickly, now that we've finished with a little bit of the funds from MGIM. By the way, I mean, that team, the MGIM team in London, 37 people, years of experience as an average, about 15 years. And so it's a great team. And if you ever can, when James is here, and he's here quite often, set up a meeting with him. Absolutely fascinating team that he runs over there. So what is the value proposition of Momentum Wealth International? What is that? And if you want to remember one thing, it's probably this. We try and make investing international as simple, secure, and transparent as possible. And that is our motto. How do we do that? Dedicated distribution support. And I'll go into this now, but we've got 5 specialists throughout the country. They are not local specialists. They only speak about the dollar. That is their mindset. They are international specialists. They will accompany you to client visits. That is what we've set them up to do throughout the country. A digital advisor ecosystem. Experience our online portal, because it is the best online portal of any international platform in this country. And I'm standing on a stage and I'm telling you that. The service is great. It's a different service experience. They do things differently. And I'm excited to say I'd like to see what they're going to do in another 1 to 3 years. And tools and calculators. And so here's the countrywide support, 5 dedicated specialists, and available for client engagements. Jurgens Fourie, Demal, Marius Hillier, Marius Deprier, and Sherry Lee here. Sherry Lee, do you quickly want to stand up? For those of you who have met her, that's our international specialist. And so, thank you very much for your time. I hope you have a wonderful time with us, and enjoy the rest of the day.